Good afternoon, everyone, and thank you for showing up for our third Gallo Coffee chat. I have Eric beside me.
Hello, guys.
I think today we're going to focus on two things. One, we've been very busy at the firm talking with and filling out the CUs, so the Canadian Emergency Wage Subsidy. In fact, Eric has done a lot of those calculations and inputs for people. So we're going to talk about the lessons learned this week from the CEWS, and once we've talked about that, we're going to get into the commercial rent subsidy. Now, the caveat with the commercial rent subsidy, of course, Eric, is that it hasn't come out. Right? We don't know the rules. We only have a wide guess at what it is. But we've heard from a lot of our clients that they have questions about it. So we thought we'd tackle those two and then answer any questions going from there. So, Eric, take it away. How did the wage subsidy go this week?
All right. So based on the stuff that we've seen so far this week, there's a couple of things that I just wanted to touch on that lots of people seem to be having some confusion with. And rightfully so. This stuff isn't easy at all. One of the first things that I think we should take a look at is a lot of people are using big payroll providers, which is a good thing. A lot of these big payroll providers offer a lot of generatable reports. What that means is, people have different payroll schedules, like, bi-weekly, weekly, monthly, semi-monthly, and it's all so confusing. But the great thing about these big payroll providers is a lot of them give you the option to break down your reports on a weekly basis, which is exactly what the CEWS worksheet is looking for. That's what they're hoping for you to fill your information out as.
So Eric just admitting a few more people that are in the waiting room?
Yeah. So that's a big one. So my recommendation if you're using an ADP, a Payworks, a Ceridian, anything like that, is visit your online website. Take a look at what your user capabilities are. I've done a number of clients that have had access to their online reports, and they can change and generate good reports that make the process very simple. It takes a lot of the stress out. The second thing that we want to look at is excluded days. So that's the one thing I know lots of people are confused with. How do I calculate the baseline? Let's say I hired an employee halfway through February. That means that like the 10.71 weeks that a lot of the spreadsheets are calculating that doesn't necessarily apply because they're not working from January to February, essentially.
Yep.
But the 10.71 weeks includes that. So if an employee has gone unpaid for 7 consecutive days, that week is excluded.
So it reduces the amount of weeks, which essentially allows them to have a higher wage subsidized.
That's exactly right. That essentially means like, they could have voluntarily stayed home because of COVID and not taken a wage very early on, reducing possibly their baseline. For that reason, they want to reduce the weeks. Sorry, just also adding more people in.
And for those of you that have just joined, we're gonna have a two-part chat. The first part, we're halfway through it. Eric's just kind of touching up on sort of what we call the lessons learned from the first week of the wage subsidy, and then we're going to go into the commercial rent subsidy rules and talk about where we see some of the issues with that.
Definitely. Yeah. Okay. So the next thing I want to just touch on is the furloughed employees. We've had a couple clients who are not quite familiar with the application process. Last week, we discussed how the application form would come out. And one of the things I had mentioned was there's a section on that application that asks specifically about furloughed employees. They talk about CPP and EI, and we only want...
Sorry, Eric, what is furloughed again? Because it's a term we don't see. We don't see it in the Income Tax Act. We certainly don't see it in a normal kind of lexicon.
Definitely, and it's not certainly something that people normally engage in for sure. So furloughed employee is an employee who was still paid a wage but did not have to come into work. They did not actually have to perform their regular duties, but they received their wage anyway.
So a furloughed employee then isn't an employee who's working from home. It's an employee who's at home but not even working.
That's right, exactly. They cannot have actually performed any of their duties in order to qualify for this benefit.
Okay.
And that's the one specific thing is we don't want to put an amount into those boxes. The boxes, I believe it's D and E that relate to CPP and EI for furloughed employees only. If you have no furloughed employees, meaning if your employees were at home and working, they don't qualify. So you should put a 0 in those balances. It is only for employees that specifically were home but still receiving a wage and not working.
Perfect, thanks.
that's a big distinction for sure. Another question is actually, who should I include in this spreadsheet? Lots of people have tons of employees, so many employees, and lots of people are asking, who should I put in here? What employee should I be calculating the subsidy for?
Absolutely, yeah.
That's a big question, and the question you should be asking yourself is, if I terminated employees, when did I terminate them? Because if they did not work if they were unpaid for more than 14 consecutive days between March 15 and April 11, they do not qualify. But for just the first period, it's a bit of a complex rule. But essentially, if you've terminated them before March 15th, there's no sense in adding them in unless you've actually paid them during the COVID periods.
One of the questions I had last night actually was they had laid off, not terminated, but laid off because of COVID, one of their employees, or all their employees, and they want to bring them back because it was a dental office, and they're able to start on Monday. But because it's a mid-pay period, they thought that if they brought them back, they've been off for 14 days, they don't get the wage subsidy on those people.
That's an interesting discussion for sure. So the first period where we would be looking at is March 15th to April 11th. The following period is April 12th to May 9th. So as long as they were paid, as long as the unbroken period in that section does not exceed the 2 weeks, you qualify. Okay. So Monday would be May 9th. So on Monday, they would not qualify for that first week, but this following period, they now are eligible again.
Okay.
So the last thing that I wanted to touch on is the 10% temporary wage subsidy. Now that's a big topic, and lots of people are quite confused about that. On the application, there is a section that requires you to enter in the amount you were eligible for the 10% subsidy.
Yeah.
And that's not to say you actually have deducted this amount. It's just to say how much you were eligible for. The reason is because you can actually forward that balance if you haven't deducted it for March, like I know lots of people haven't because they were very confused and cautious. You can forward the balance that you haven't deducted to future payroll periods.
Okay.
And it's important to remember that 10% that you put into the application is the amount for that period that you would have been eligible. It will reduce the amount of subsidy you get for the 75%. That is true. However, the future periods it works itself out in future periods.
Yeah, I was working through that myself, and I found it very confusing because if you hadn't taken the 10% wage subsidy, wage reimbursement, that was the first payroll program, it was still deducted off regardless on the 75%. So some people are saying, well, do I lose it? And thanks for answering that question, because the answer is absolutely no. You don't lose the 10%. It's a matter of timing of when you get it. Mm-hmm. And I believe there's going to be some other forms that will come out in the future.
Exactly. Yeah, that's a really good point. Some people might even say, well, I've laid off or terminated a lot of my employees, and my federal income tax deducted on my payroll remittance is never going to be enough to consume whatever my first period's amount was supposed to be. I might lose the subsidy because I can't deduct enough. Well, the form that will be coming out, which hasn't been released yet, will be a self-reporting form that you will fill out to indicate to CRA that you have over-remitted, meaning that the 10% hasn't actually been deducted but should have. That means that in the future, in the future periods, you will be able to get that money back later.
So it's almost a form saying the old 90% is the new 100%.
That's right. Exactly.
That's confusing.
Yeah, 100%. It is very confusing, but it eventually works itself out, and obviously we're here to help.
Okay, great. And thanks on the last point. I know initially we were certainly saying to a lot of our clients that we put the Excel on our website. We have some instructions. We have a YouTube video on how to fill out the 75%. But still, a lot of people just sent it to us to get us to fill it out for them. And with the new attestations, we can actually file it for you. And Eric's been doing that for almost 30 or 40 clients this week alone. Okay, we'll let you guys think about that. If you have any questions, please ask in the chat bar, and we'll be more than happy to address them and share them with everyone else that's on the line. We have about 40 people that are participating right now. But what we're going to go to now is the CECRA for small businesses. So I call that the CERCRA. So almost like a Justin Trudeau dance or something. But the Canadian Emergency Commercial Rental Assistance Plan. Now, we hesitated to talk about it this week because the actual legislation isn't out. But what is out is some refined guidance and rules from CNHC, who's going to be the executing authority or the program controller for this. And there are a few interesting tricks and traps that might happen. And we wanted to address the initial thing because we're getting a sense that some of our clients, whether the landlords or the tenants, are starting to conversate with each other, which is always good, but the facts might not be true, right? Or things may change. So, and we also asked some commercial realtors and some individuals that are in the commercial space to join us and ask questions, and so we can get some answers. So let's jump into it. Really, from our reading of it, there's really two entities involved. One is the landlord, and there's some criteria to be a landlord, and two is the eligible small business or eligible small business sublease. Mm-hmm. Now, really interesting is that they're using the term small business, so it's really saying who they're focusing on. Yeah. So let's go through some of this criteria.
Yeah, definitely.
So the first part of the equation is the landlord, and there's a few criteria for the landlord. The first is you have to generate rental revenue in Canada, and the property must be in Canada. So you certainly can't be in overseas. That's fairly obvious. You own that property where it's been impacted, where that small business has been impacted, right? And the impact ratio is quite high, 75%. Mm-hmm. And you have a mortgage loan secured by the commercial property. So you have a mortgage on the property. Now, I do see there's an asterisk in the note. So I think people who don't have debt or a mortgage on that property, there's something that's going to come. I know some of our clients said, well, we have private mortgages or private debt. I think we're going to be covered on it, but we don't know yet. Initially it wasn't on there, but it looks like it should show up. And the last criteria is that the small business tenant has reduced revenues of at least 75%, which creates a few problems, and we'll get to them shortly. So if you meet that criteria, you own a piece of land in Canada, it's in the affected place in Canada, you have a debt on that property, that commercial property, and or an asterisk, whatever that might be, you'll be okay as a landlord to apply for this. Mm-hmm. In conjunction with the eligible small business.
Definitely, exactly.
And of course, this program is only for April, May, and June. So it will not affect March like most of the wage subsidy programs where you're allowed to use March. It doesn't apply for March.
Yeah, actually, now that you brought that up, that's a really good point. For the people who are looking at, for this to apply, you have to have experienced a revenue drop. The small business has to have experienced a revenue drop of 70%. And for those of you who've applied for the 75% wage subsidy,
yes,
you will really understand how they're calculating the revenue drop. It's going to be very similar. It's going to be, you can either use the average of January and February 2020 compared to the months of April, May, and June, or you can use the same month in the previous year to determine the drop.
That's right. And so Eric was kind enough to kind of loosely say, I got my numbers wrong there. The wage the commercial rent subsidy is 75%, but the revenue drop for that small business is 70%. So I just wanted to clarify that. The last thing on that is that the commercial landlord had to have filed a tax return that showed rental income. Mm-hmm. So that's interesting because if you want to get into the technical aspect, it allows for people who own rental properties, commercial rental properties, and report on their personal tax return. It also allows, obviously, for corporations. Now, what's interesting is if you, like many business owners, had two companies. One was your operating company. Call it, cup making company, and you had a holding company that owned the building, and you were charging rent back and forth, but it was defined as in the Income Tax Act as active business income between related parties. You actually are reporting rental income on your Schedule 7 of your corporate tax return. So you may have a problem. I think it's getting technical in that regard, but I would say for anyone who has related party rents between an operating company and a holding company, there may be some issues there. And because it goes back as far as 2018 and 2019 tax returns, if you haven't filed your 2019 tax return yet, you may want to look at that first before. And if you have, maybe there's a requirement to amend it. Now that will probably go against some of the provisions around, the rules that will come out. But talk to your accountant right now if you're in that situation, operating company, holding company, and you haven't filed your 2019 tax returns, because there may be some things we can do to get that rent back. Notwithstanding, we haven't seen the legislation and the related party rules, which we know with the wage subsidy, they had significant related party rules around that, as well as corporate group rules.
Yeah, exactly. Actually, with relation to the corporate group rule, this is very specific. They're really trying to target the small business tenant. That is to say, the small business tenant cannot have more than a maximum of $20 million in revenue on a consolidated basis. And that's a really specific rule, because that means that, as you may know, for the temporary wage subsidy or the 75% wage subsidy, there is some leeway between how you could report what your revenue was, and you could make an election to choose one way or another. Whereas for this, they're saying it's quite specific in that on a consolidated basis, meaning the entire related group, or they can only have a maximum of 20 million in revenue.
So I could think of a situation where, this may work really well for a series for a restaurant, for example. But if you're a large restaurant group, well, not even large maybe, but good size, if you added up the revenues of all your restaurants, you could easily be over 20 million.
Yeah.
And yet any individual location or company would be in of itself an eligible small business.
Yeah, definitely.
I would think of maybe if you own 4 or 5 Tim Hortons or McDonald's.
Oh, for sure.
Or if you own a busier restaurant or bar in the city and a couple other small ones. So that could be very problematic. So you're going to have to look into that. So before you get involved in that, certainly you're going to need to assess that as the eligible small business applicant. The other thing with the eligible small business applicant is your gross rent can't be more than $50,000. Now, there's been some discussion on what gross rent really means. So, of course, gross rent isn't defined in the Income Tax Act like many other words. So we have to really fall back on our common lexicon, or what gross rent is defined in the lease. So if it's not clear in the lease, there might be some requirements to do some lease amendments.
Definitely, for sure. Bringing up the fact that there needs to be a lease agreement. Sometimes with related companies, or OpCo and Building Co. Sometimes people don't put together agreements between the tenant and the owner. But it's very specific in this ruling. You need to have an agreement, number one, for your lease to indicate how much the gross rent is, or how much your base rent is, and what you would be responsible for. And also, talking about these 75% rent reduction, you also have to have a signed agreement to indicate that you will be providing a rent reduction.
Yeah, one of the interesting things about if you meet the criteria as a landlord, you meet the criteria as the eligible small business, you have to agree to basically forego 25% of your rent during that period. You also have to agree to not evict the tenant. And right now it says specifically during that 3-month period, the April, May, and June. Now, what's interesting is you have until the end of August to actually fill this out. So technically, you could fill out and claim this in conjunction with the landlord and or the eligible small business all the way to the end of August. So you'll know you can fill this out after the fact, and the eviction, it would be somewhat irrelevant because you're already into July or say mid-August, for example.
Yeah, definitely. And one of the questions is, if we've already gotten to August, it can be applied retroactively. They've specifically stated that you could have gotten. I mean, obviously we're already past April, so if you've already paid the rent and that exchange has already occurred, the guidelines here so far have stated that you can retroactively say, like, the 75% reduction has actually already been applied, and you can call it a credit for future periods.
That's right. So if you did collect full rent in those 3 months and you signed the agreement, you would just then forego rent, the difference that you're going to eat on a go-forward basis.
Mm-hmm.
The other interesting piece with this legislation, people asking is what's the criteria on the 70% rent reduction? Well, it's the exact same criteria to use as the wage, in terms of you can either use the same period or the average of January, February. They haven't mentioned a cash or accrual basis because it's very specific to the lease agreement.
That's right. Yeah.
So now that I think we've talked about kind of the rules. How attractive is this program? How widespread do you think it's going to be?
I actually think that this is very, very specific. The ruling so far has been very specific to very small businesses, considering all the extra pieces and stuff like that. So what I say is very widespread. Are they targeting lots of different companies? No. I don't think this is lots of different companies. They've really eliminated anyone who, like very large companies. They're really trying to narrow down on those micro or smaller businesses, obviously less than gross rent of $50,000. Yeah, that's kind of what my perspective is. What about you, John?
Well, yeah, I think it's going to be very hard to administer the program, and I think that the competing interests, natural competing economic interests of landlord and tenant, may not be as obviously congealed with this program. I mean, if I was a landowner, and I had a tenant who was clearly struggling, I don't know how quickly I would be keen to sign into this agreement if I knew I could evict them and potentially take over the TIs and all the assets inside that building. Now, I don't want to sound like I'm heartless, but it's going to be a consideration, I think, for many landlords. Why would I enter into an agreement where I might get more value by just closing them down if I don't think they're going to succeed? And that really, I think, goes down to the 70% threshold. I mean, how many of these companies that have a 70% drop in revenue will be viable in the long run? Some will be, for sure, and some will be dependent on the market. But I think landlords will have to consider whether is there more value in just, quite frankly, changing the locks and selling the equipment or selling the TIs to someone else.
Definitely, for sure.
One of the questions we've had on this program is, what happens if I had actually signed a lease in January or February and the tenant is in their what we call the fit up period, and though we have a monthly rent rate, they're not paying because they've been given some leeway for a fit out period, and that's a very interesting question. What are your thoughts on that?
Yeah, so the fit-out period, as we've discussed before, is a period where essentially they're not making any revenue, right?
That's right.
So in that period, based on the criteria that they have, they would have an infinite drop technically, because 70% drop in revenue from 0% or from zero revenue is still zero.
Mm-hmm.
So that's a really interesting situation, because I don't believe they've addressed that. I don't believe they've addressed how that's going to come to be and how that will look for, say, someone like that.
Yeah, certainly. I would think that on a very strict reading of this, neither would qualify from the extent that they haven't paid rent, so it wasn't paid or payable in terms of the lease agreement. And two, I don't think you can get 70% from zero to be zero and say, sure, it dropped. Shit, it dropped 500%. I think I said a bad word. I apologize on that one. So I think that's going to be quite difficult. I see a question.
If we produce executed copies of triple net lease agreements, would we still have to amend the lease to read specifically gross rent, or would it be as simply a producing and operating budget?
Great question. I don't think there's an answer today. I think the answer will come in the legislation, but in the spirit of what it's supposed to do. If the total amount paid to the landlord is under $50,000, I think we'll be okay. I don't know if you see, we're blurry. It looks like we're blurry. I think we're back on again. I apologize for that. So I think to answer that question is if the rent is less than $50,000, whatever way you call it, I think you're okay. I think where you have a problem is if that rent is $50,000 or $52,000, and with the triple net, you break it out, and the actual gross rent is less than $50,000. They would otherwise qualify, but because the way the lease is written, it's over $50,000 on a triple net base. I think you might have a problem there. So I think to answer that question, one is we have to see how they term it in the actual agreement or the actual law. Two is if all in it's under 50,000, you're probably going to be safe. And three, if you're not, you may want to be making some lease amendments going backwards so that at least a good portion of that, or up to $50,000, will be covered. Because the way I read the rules is that if it's over 50,000, all of it doesn't qualify.
That's right, 100%. The rules are specific that you would, if it's over 50,000 in gross, you would not be considered an eligible, I believe the term that they used is an impacted small business tenant. So if their monthly rent is in excess of 50,000 gross, they're not considered an impacted small business tenant, which would disqualify that tenant for the benefit, or the landowner for that tenant for the benefit.
Yeah. So there's still definitely some fogginess there in terms of what it will be included in the subsidy. But I think right now, until the legislation comes out, if you're either a tenant or a landlord and you think you're close to that $50,000, you may want to look at the lease and start having that conversation there. For sure, 100%. I think if the wording of the lease and it say it's a $5,000 lease, triple net, and it's a difference between $4,000 and $5,000, it's $250. I don't know how much effort that's worth getting a lawyer involved for 3 months at $250, right? It may not make sense. I also see a question on GST. GST would be excluded because generally all these entities would be GST entities. So GST is not an expense to a company; it's a flow through. So GST wouldn't be in my understanding would not be added to this. It's the rent, and all rent includes GST for GST entities. There may be a few nuances there, but it shouldn't include the GST.
Definitely. And I think I want to touch on one thing to note is the part of the question is should the lease be amended to specifically read gross rent? I'm hesitant to say people should go out and start amending their leases so that the wording fits exactly what CRA is saying or what the government is saying, because I'm of the understanding that they're pretty aware that a lot of these tenants already existed and they didn't just show up for the purposes of this specific program. In that specific situation, there might be things to look at, but if you already fit the criteria and you're well below your $50,000 a month, there should be no need for you to go and amend it so that it fits this specific program. I
think if you're close to 50,000, 75% of that is $37,500 a month. It's probably worth talking to your lawyers and rewriting leases. But at $3,000, $4,000, $5,000, you're talking $250 a month for 3 months. the cost benefit analysis may not be there. And that brings us on to the point that Eric and I were talking about earlier. These agreements, are we going to have to get lawyers involved in this?
Yeah, that's a really good question. And quite frankly, a lot of these things, like there's you need an agreement for the rent reduction. You need to make sure that it speaks specifically about a moratorium on eviction. So it is possible that you might need to involve legal counsel for those 3 months.
Yeah. So once again, there's going to be a cost benefit analysis on that. I'm hoping that the program will be quite straightforward, and CMHC will be producing a document that both parties sign. But then again, I would advise a client, talk to your lawyer before you sign that CMHC agreement, because it most likely will be binding. So there's going to be some administrative costs to execute this, much like in the wage subsidy, where you're getting professionals to help fill out those wage subsidy forms. There's some administrative burdens here that may not necessarily have to be here if these were structured a little better. And quite frankly, I think that's why we didn't see the Prime Minister actually release the details today. If we've seen in the past, every Friday he's releasing these details on these subsidies. This Friday he didn't release it because I think they're having a hard time refining it.
For sure, definitely.
The other thing I wanted to talk about on this is the going back to the related party. I think to ask that question around what our viewer asked about, amending agreements. I think if you don't have an agreement with a related party, it's really important to get an agreement with a related party. Okay. I think that's probably the two biggest things. Do you have anything else on either the wages or the rent subsidy?
Not. I think specifically for the wage subsidy, lots of people are still asking whether or not people should come back and whether or not we should hire people back, and if they qualify for subsidies. There are specific rules, and I encourage you to look into each individual situation. There's no broad answer to or solution for every single situation. But if it's a brand new employee, you've never had them before, and they're not related to you, you can hire them. They are eligible for the subsidy. That's a big question that we get a lot. Mm-hmm. And if you haven't looked into your situation yet, it is actually a good program. There is a lot of money on the table. You just need to start getting the work in.
Oh, yeah. There is one more question here. It says, if the landlord and tenant pass the qualification, where does the subsidy go that's provided by the government? Well, you're going to get it. So, and that actually brings a really good point on what we had been discussing pre the chat, is the government gives you a 50% loan that's forgivable if you meet all the criteria. So that's actually income to the landlord. And I don't know if you have to write an invoice to the government and ask them to pay you, but I suspect not. You'll probably get a check in the mail. Your tenant is supposed to pay you 25% plus GST, of course, and then that is income to you. Now, the interesting thing will be, the other 25% is forgivable. So if you're using accrual accounting, you shouldn't be putting that into deferred revenue, and you shouldn't be applying any sort of GST onto that rent. It's not there. If your rent was generally $10,000 a month, it's now $7,500. You'd expect that your tenant would give you your $2,500 plus GST, and the federal and provincial government would give you the remainder at $5,000. Whether they're going to give you $5,000 plus GST, I suspect not. I suspect they'll be giving you a loan for $50,000, and that won't include GST, nor do you have to take GST off of that. That's what I expect the technical applications to be. So it is revenue to the landlord. Now, the interesting thing about this is, what happens if the tenant doesn't pay you the 25%?
Yes, that is a great question. And I think you would be on the hook.
Yeah, I think now you have a collections issue, and you can't evict them. So from a timing perspective, you may want to only apply for this after the 3 months, after your tenant has paid you at least the 25%. That way you know you've been made whole. Applying for it today for all 3 months, and your tenant doesn't even pay you the 25%, and you can't evict them and seize their assets, I don't know if you're better off from a landlord perspective, to be fair.
For sure, definitely.
The other thing and there is one more question. So while I talk, maybe Eric, if you can read that. The other thing I saw is that the landlord is on the hook. So I could envision a situation where you apply for it, you get the money, but for some reason, either the landlord or the tenant is actually not a qualifying entity. And then it looks like the way the legislation reads, the landlord is on the hook for the complete loan. So what's the requirement then for the tenant to be truthful? So in a situation where perhaps the tenant has over 20 million of gross of revenue amongst its corporate group, and it said it doesn't, how do you, and you took that money, you got the loan, now all of a sudden it's not forgivable after an audit, what happens? And it's not clear, that we don't have the answer, but it's another risk assessment that the landlord will have to go through.
Yeah.
There.
So the last question is specifically speaking about how the funds that you receive would be used. So like for example, the tenant portion, the 25% tenant portion of forgivable loan. Now, the whole point of the loan is for it to be forgivable, assuming you qualify in all aspects. So that would mean that the 25% would go to your pocket. Like you would run your business normally. The whole idea is so that landlords can operate their businesses normally. Meaning that 50% loan that you would receive, if it were considered a loan, you would pay that down normally. But if you pass all the forgivable qualifications, that would just be paid out to you.
That's right.
So there would be no need to pay for those premiums of the loan until after which time it would be considered to be not forgivable.
That's right. I think I read somewhere that the proceeds might go to pay down the landlord's debt, but I haven't seen that. I've seen that in some stuff I've read, but I haven't seen that in the official documents by either CRA or on CRA. There's a link to CMHC, the Canadian Mortgage Corporation, and on their link, I have not seen anywhere where they said that forgivable loan gets paid down against the principal of whatever loan you have. And I think because how would you work that? I mean, the banks would have to get involved. They'd have to ensure that there's no penalty for a payment down. And then would it be revenue, right? Because so now you have revenue in your company. You got to pay tax on that, presumably, if you're profitable. And then, but the whole amount is gone to pay down the debt, but you owe taxes on it. So it's not clear. In my reading, it's clear. It comes to the landlord. It is revenue, and they do whatever they want with it. And quite frankly, if you own any commercial property, you don't have 25% profit. So you're going to be in a loss position anyways. If all your tenants in your mall or your property apply for this. So that's some of the problems with the program, the way it's designed right now.
Mm-hmm. I think that's about
okay.
Everything.
So thanks again. Let's just recap. We talked about the wage subsidy, some of the tips that we've seen this week in the first 5 days of applying for the wage subsidy. Mm-hmm. We've seen issues around, where do you get your information if you use a payroll provider? That 10% wage subsidy that gets rolled up into the 75%. And what do you do with furloughed employees and CPP? If you have any questions on that, you have Eric's number. Call the firm, hit us up on our website. Eric is the in-house specialist, quite frankly, on the wage subsidy. And every day he's getting more and more questions around it. After we tackled that, we talked about the rent subsidy. The caveat of this conversation, of course, is that the legislation isn't out, and we're guessing to a certain extent on what the final legislation will look like. But what we have now, both on CRA's website and on CMHC, is pretty clear about what we've discussed today, and there's a lot of unknowns. I would have to say, if someone came to me and asked me, should you both qualify, should you take it as a landlord? I would say I don't know. I mean, there's some business discussions that will have to take place. If I was advising the tenant, I'd say, hell yeah, might as well, right? You don't get kicked out. You don't got to pay your rent, and your landlord's on the hook if it's all wrong. So Depends who you are and how I'm going to advise you, but those are the facts for sure.
Mm-hmm.
Okay, one last question because we got it in. What do we have, Eric?
What type of documentation should we be requesting from tenants to show the 70% reduction in their revenue? Yeah, that's
great question, and that goes to kind of what I said before. I mean, you're on the hook as a tenant, as the landlord for the loan. I would say you got to give it all to me. If I'm signing some attestation that's good as a landlord, that's going to put me on the hook for that loan, I want to see everything. And if you don't give it to me, and I can't trust it, then I'm not going to jointly elect in.
Yeah.
But I would say you should be entitled. The question will become is that should you have third-party verified accountant records? Once again, that comes to around compliance costs, and if a tenant can't afford to pay the rent, how can they afford for some sort of verifiable audit level sort of agreement? Mm-hmm. But notwithstanding that, I would say bank statements to show there's no deposits into the bank account. Probably POS terminals if they've been open to see that they're reduced to 70%. And of course, that assumes that there isn't some sort of attestation. And I suspect that's what's going to happen. I suspect CMHC will come out with some sort of attestation that the tenant is attesting that, in fact, what they tell you is true. And the landlord will have to forego all that information. Because it's, who wants to drop their pants to the landlord?
Yeah.
Okay, guys. Well, thank you very much for sitting down with us and talking to us on our coffee chat. Very interesting week. If you listened to Mr. Kenny yesterday, looks like some stuff's going to open up this weekend. So go outside, enjoy yourself, dust off the golf clubs because golf courses are opening. Have a great weekend. Thanks, Eric.
For sure. Bye, guys.